Welcome back, friends. If you are watching this today, I need you to stop what you are doing and pay very close attention, because what I am about to share with you could save you from a financial nightmare that thousands of seniors across the country are walking right into without even knowing it. We are talking about a penalty that can reach up to $10,000, and it comes directly from the IRS. And here is the thing that really worries me. Most of the people who get hit with this penalty had no idea they were even required to file this form in the first place. So if you are over 60, if you are receiving Social Security, if you have a pension, a retirement account, or any kind of foreign financial account, you are going to want to stay with me through this entire video because this information could be incredibly important for your financial security right now. I know a lot of you trust this channel to bring you the most up-to-date, honest, and helpful information about your benefits and your financial well-being, and that is exactly what we are going to do today. This is not about scaring you. This is about making sure you are protected, informed, and ready to take action if this applies to you. So let us dive right in. The form we are talking about today is called the FinCEN Form 114, but most people know it by its other name, the FBAR, which stands for the Report of Foreign Bank and Financial Accounts. Now, before you think to yourself, I don't have any foreign accounts, so this doesn't apply to me, I want you to hold on just a moment, because you might be surprised by how many seniors actually have reporting requirements under this rule without realizing it. And the IRS and the Financial Crimes Enforcement Network, which is part of the U.S. Department of the Treasury, take this very seriously. So what exactly is the FBAR? It is a form that the United States government requires certain Americans to file if they have financial accounts outside of the country. This includes bank accounts, savings accounts, investment accounts, retirement accounts held in a foreign country, and even accounts that you might have signing authority over even if the money is not technically yours. The key number you need to remember is $10,000. If the total value of all your foreign financial accounts combined exceeded $10,000 at any point during the calendar year, even for just one single day, you are required to file the FBAR for that year. Not the total at the end of the year, not the average. If it hit $10,000 or more at any moment during the year, you have to file. Now here is where things get really important for seniors specifically. A lot of you have lived very full lives. Many of you may have worked or lived abroad at some point. Some of you may have retired overseas for a period of time, or you have family members in another country and you help manage finances there. Others may have inherited money or property from relatives in a foreign country. Some of you may have opened accounts in another country decades ago and simply forgotten about them. And believe it or not, some seniors have pension or retirement benefits from a foreign employer that are held in accounts outside the United States. Any of these situations could create an FBAR filing requirement, and if you missed it, the penalties can be extremely serious. Let us talk about those penalties, because this is really the heart of today's warning. If the IRS determines that you failed to file the FBAR and they believe it was non-willful, meaning you did not know you were required to do it, the penalty can still reach up to $10,000 per violation. And here's the part that really catches people off guard. Each year that you failed to file is considered a separate violation. So if you had a foreign account for 3 years and never filed the FBAR, you could potentially be looking at up to $30,000 in penalties. If the IRS decides that your failure to file was willful, meaning they believe you knew about the requirement and deliberately ignored it, the penalties become even more severe. We are talking about up to the greater of $100,000 or 50% of the account balance per violation per year. That is truly life-changing financial damage, and it is something no senior should ever have to face. Now, I want to pause here and reassure you about something. If you genuinely did not know about this requirement, there are options available to you. The IRS has had programs in the past designed to help people come into compliance without facing the harshest penalties. One of the most well-known is called the Streamlined Filing Compliance Procedures. This program was created specifically for people who had foreign accounts but failed to report them due to non-willful conduct, meaning they simply did not know the rules. Under the streamlined domestic offshore procedures, which applies to people living inside the United States, you may be able to file your late FBRs and amended tax returns and pay a reduced miscellaneous offshore penalty of 5% rather than facing the full penalties. This can make an enormous difference in what you owe. But here is the critical thing. You need to act before the IRS contacts you. Once the IRS has already initiated an audit or investigation into your foreign accounts, the door to these more favorable programs typically closes. That is why today's message is so urgent. If you think this might apply to you, do not wait. Do not put it off until tomorrow or next week. The sooner you address this, the more options you have. Let me give you a real-world example so this feels more concrete. Imagine a 72-year-old retired teacher named Margaret. Margaret was born in the Philippines and came to the United States decades ago. She still has a small savings account back in the Philippines that her mother left her when she passed away. That account has fluctuated over the years, but there were definitely times when the balance was above $10,000. Margaret receives her Social Security every month. She lives comfortably, and she has never thought twice about that account overseas because she rarely touches it. But the truth is, Margaret has had an FBR filing requirement for several years and had no idea. If the IRS were to discover that account, Margaret could face significant penalties on top of everything else she is managing in retirement. This scenario plays out more often than you might think. And it is not just immigrants or people born in other countries. American seniors who have retired to places like Mexico, Portugal, Costa Rica, or other popular retirement destinations and opened local bank accounts there face the same requirements. Seniors who have vacation homes abroad and maintain local bank accounts for expenses, same requirement. Seniors who have investments in foreign mutual funds or stocks held in foreign brokerage accounts, same requirement. So let us now walk through what you need to do if you think this might apply to you. The first step is to take an honest look at your financial life. Do you have any bank accounts, savings accounts, investment accounts, or retirement accounts held at a financial institution located outside of the United States? Do you have signing authority over any accounts in another country, even if the money belongs to someone else like a parent or a business partner? Have you ever inherited money or property abroad that involved a foreign bank account? If the answer to any of these questions is yes, and the total value of those accounts ever exceeded $10,000 in a given year, you likely had a filing requirement. The FBR is filed separately from your regular tax return. It does not go to the IRS directly. It is submitted electronically through the Financial Crimes Enforcement Network's BSA e-filing system. The deadline to file the FBAR is April 15th each year, covering the previous calendar year, with an automatic extension available until October 15th if needed. But if you have missed years of filings, you cannot just file one form and call it done. You will need to file an FBAR for each year that you had reportable accounts. Now, the next step I strongly encourage you to take is to speak with a tax professional who has experience with international tax law and FBR compliance. This is not the time to try to navigate this on your own or rely on a general tax preparer who may not be familiar with these specific rules. Look for a certified public accountant or a tax attorney who specifically works with foreign account reporting and offshore compliance issues. Yes, there may be a cost involved, but it is absolutely nothing compared to the penalties you could face if you try to handle this incorrectly. When you speak with that professional, make sure to gather some key information beforehand. You will want to have the name and location of every foreign financial institution where you have or have had an account. You will want to know the account numbers. You will want to have a general sense of the highest balance those accounts reached during each year in question. Your tax professional will use this information to determine your filing requirements and help you choose the best path forward. I also want to address something that comes up often with seniors specifically: the concern about what happens if you report these accounts now, after years of not reporting them. Some people worry that coming forward will automatically trigger a huge penalty or even criminal charges. The truth is, voluntarily coming into compliance, especially through one of the IRS's official programs, is almost always viewed far more favorably than being discovered through an audit or investigation. The IRS has consistently made clear that they want to encourage compliance, and the streamlined procedures I mentioned earlier are evidence of that. Coming forward on your own with professional guidance is almost always the safer and smarter choice. There are also some other related forms you should be aware of, because foreign financial reporting does not stop at just the FBAR. If you have ownership or interest in a foreign corporation, partnership, or trust, there may be additional forms required, such as Form 5471 for foreign corporations or Form 3520 for foreign trusts and gifts. If you have foreign financial assets worth more than $50,000 on the last day of the tax year, or more than $75,000 at any point during the year, you may also need to file Form 8938 with your regular tax return. This is called the Statement of Specified Foreign Financial Assets, and it is required under a law called FATCA, the Foreign Account Tax Compliance Act. Keep in mind that Form 8938 and the FBAR are separate requirements. Having to file one does not eliminate the need to file the other. A knowledgeable tax professional can help you determine which forms apply to your specific situation. Now, I want to make sure we also talk about something very important for seniors who may be in the process of receiving inheritances or gifts from family members abroad. If you receive money or property from a foreign person or foreign estate, and that amount exceeds $100,000 in a given year, you are generally required to report it to the IRS using Form 3520. Failing to file this form can also result in significant penalties. So if you have recently received or are expecting to receive a substantial inheritance from a relative in another country, please bring this up with your tax professional right away. And one more thing I want to mention for those of you who may be concerned about privacy: the information reported on the FBAR is used for law enforcement and regulatory purposes, but it is kept confidential and is not shared with the general public. You are simply fulfilling your legal obligation as a U.S. person with foreign financial interests. There is nothing shameful or unusual about having foreign accounts. The requirement is simply about transparency and compliance with U.S. law. If you are someone who knows another senior, a friend, a neighbor, a family member, who has lived abroad, has family overseas, or has ever mentioned having accounts in another country, please share this video with them. This is exactly the kind of information that falls through the cracks, and it can make a real difference in someone's financial life. A $10,000 penalty, or worse, tens of thousands of dollars in combined penalties, could devastate a retirement budget that someone has worked their entire life to build. Sharing this information is one of the kindest things you can do for the people you care about. To summarize everything we covered today, if you have foreign financial accounts that exceeded $10,000 at any point during the year, you are required to file the FBAR. Failing to do so can result in penalties of up to $10,000 per violation for non-willful failures, and far more for willful violations. If you have missed filings in past years, there are programs like the Streamlined Filing Compliance Procedures that may allow you to come into compliance with reduced penalties, but you must act before the IRS comes to you first. Gather your account information, find a tax professional experienced in international tax compliance, and take action as soon as possible. And be aware that other forms, including Form 8938 and Form 3520, may also apply depending on your situation. You have worked hard your entire life. You deserve to enjoy your retirement without the stress of unexpected penalties or government notices. Staying informed and taking action when needed is how you protect everything you have built. If this video was helpful to you today, please give it a thumbs up. It only takes a second, and it really does help us get this important information to more seniors who need to hear it. And if you have not already subscribed to Senior Benefit Scope USA, please do so right now and make sure you hit that notification bell so you never miss an update. Every single day, we bring you the most current and relevant information about Social Security, Medicare, SSI, SSDI, pensions, and all the government programs that matter most to you and your family. We are here for you, and we will keep showing up with the information you need to protect your benefits and your financial future. Thank you so much for watching. Stay safe, stay informed, and we will see you in the next video.